billionaire Vijay Shekhar Sharma's Paytm Payments Bank has been upgraded to a scheduled bank by the Reserve Bank of India. Scheduled banks refer to those which have been included in the second schedule of the Reserve Bank of India Act 1934. This is expected to help the 4.5-year-old bank expand its financial services operations, as this makes it eligible to partner in government-run financial inclusion schemes. Other payments banks that have been added to the second schedule include Fino Payments Bank and the India Post Payments Bank. As a scheduled bank, Paytm Payments Bank can take part in requests for proposals issued by the government and large corporations, primary auctions, fixed rate and variable rate repos, and reverse repos, along with participation in marginal standing facility. It now becomes eligible for refinancing facility from the RBI at the bank rate and acquires membership to the clearinghouse, as well as getting access to currency storage facility. Banks which satisfy the RBI that their affairs are not being conducted in a manner detrimental to the interests of their depositors are included in the second schedule. Paytm Payments Bank, which is owned 49% by 197 Communications and 51% by its founder Vijay Shekhar Sharma, had 64 million savings accounts as of March 31 and over Rs 5,200 crore in deposits. Even with the status upgrade, being a payments bank, it still cannot lend or issue credit cards on its own. Payments banks would be eligible to become a small finance bank once they complete 5 years of operations. They can then undertake lending activities. This conversion is not automatic and requires the central bank's approval.
When the RBI registers you as a scheduled bank, then there are two things that can happen. One is in the normal course, let's say either a cooperative bank which got scheduled, let's say, or if you are let's say a small bank and then you become a small finance bank and you become a scheduled bank, then you get a certain set of benefits. You can participate in settlement directly. You don't have to approach another bank for your settlement. So there are those kind of activities that you can carry out if you become a scheduled, if you're a scheduled organization, scheduled bank. In case of payments bank, however, the one or two areas where I suppose, you get a benefit of becoming a scheduled bank, let's say, is that, let's say you can make investments. There are few guidelines associated with investments in terms of directly participating in the reverse repo kind of market, and also some settlement kind of additional benefits you get, which in the normal course of payments bank would have got. So if you study, let's say, typical payments bank and this particular payments bank as well, then you will realize that since they do not carry out lending, since they do not carry out, any particular kind of, let's say, activity, even the deposits, for example, there is a limit that the license itself sets out. I mean, when you become a payments bank, you cannot accept deposits beyond a certain amount. So all those conditions will remain, except that you can get some additional benefits. The other side of the whole thing is that when you become a scheduled bank, you're supposed to, the compliance, increases. You are supposed to, every 14 days, there are a certain set of reports. There are periodic reports that you're supposed to comply with and provide to the regulator's office. So that's an additional responsibility that is cast by the regulations, under the minute you become a scheduled bank.
According to RBI guidelines, the maximum balance an individual payments bank customer can hold is Rs 2 lakh. Therefore, a scheduled bank status will not fundamentally alter the way in which Paytm Payments Bank is conducting its business.
For more news, views and updates, subscribe to Business Standard on Google Podcast, Apple Podcast and Spotify. Also follow us on YouTube, Vimeo, Instagram, Twitter, Facebook and LinkedIn.